welcome to another episode of Market on Chart Fanatics. I'm your host, Kevin Dubrisky. We're going to be covering some fundamentals, breaking down what's moving markets and why. Why has gold been soaring over 18% from its June lows? And what bias you should have going into the day, because we never want to be the trader that tries to call the top or catch a falling knife. So we're going to be following the trend on gold, but we're also going to take a look into NASDAQ and the S&P 500 as they've been displaying some weakness, and Nvidia has had 7 red days in a row for the first time in a few years. So we're going to break that all down right now. If you have any questions in the meantime, make sure you drop it in the comments because our live stream starts right now. So first, let's look at our MarketEdge.ai platform, which is our fundamental tool that gives us some insight into what's actually moving markets and why. Technical analysis is great. It's important that we have some type of edge in our technicals, but to actually understand the fundamentals behind our financial markets is another edge and another tool that we should have on our belt. So if you don't already have it, sign up today at MarketEdge.ai and use code CF for Chart Fanatics for 20% off. So guys, let me know what you want to look through first. We can look through ES, we can look through gold. I say we start with gold, seeing that it has a much cleaner and a much more clear trend than the S&P 500 and NASDAQ do. So what's great with market is we just released this feature called Ask Market. First, however, I'm going to go through our dashboard and show you how I use it every single day to just gain that confidence and gain that edge of, do we have continuation? Are we ranging, or do we have the chance of a reversal risk? So the first thing you see when you open up your dashboard is going to be the headline. Gold hovers near recent highs as softer oil eases inflation anxieties. Now, a lot of people thought gold is pushing higher just because of inflation. That is not exactly the case. The case is gold's moving higher because oil's moving lower. Yields are moving back lower. The odds of a rate hike are coming off of the table because of the domino effects, because of the snowball effect of all of these things coming down. And again, the safe haven asset, gold, being a great inflationary response, that's what we're seeing this bull move on gold from. So let's break down what we always like to do first is check our news feed. Our news feed is going to give us some insights into what are we seeing, how are we trading it, and if there's any new headlines that came out overnight that we should be aware of. So with MRKT, we get our news feed from Reuters, and we have an all tab. The all tab is going to give you every single headline that comes out. Now, we're not going to sit here for an hour and sort through every single headline that comes out every minute. So what we can do is we can go through our filter of breaking news. Click our breaking news, we could see anything that came out relatively important more recently. Now, this is going to be the tab that you want to keep up no matter what or when you're trading. Whether you're trading the New York Open, you're trading the London session, you're trading the Asia session, you want to keep your breaking news tab up because, as you should know by now, all it takes is one headline. All it takes is one tweet or one Truth Social post that can truly move markets in a crazy fashion. So let's break it down. What do we have in our breaking news? Canada and US ties after headwind in both nations. Iran vows to resist widened US sanctions. Trump says Iran failing to pay military, killing protesters at unprecedented levels. These are all elevating headlines, right? Which would force more of the safe haven, but not force so much of higher oil prices. Now, the thing is, we can't have higher oil and higher gold, because what happens when we have higher oil is it has that domino effect. And it's not even a domino effect, it's a snowball impact into not just the US economy, but the global economy. Higher oil prices means higher energy prices, higher imports and exports. And guess what? When these big tech companies, growth companies, big tech, big AI, they have more spending on energy, they have more spending on imports and exports. Guess what happens to consumers' prices? They go up. These companies don't want to take higher costs and get margin crushed or have their margins get thinner. They want to take them and say, okay, well, I guess it's time to increase our prices. So that's our breaking news tab. Very quickly, again, you want to keep this up. The second something important comes out, it will show up right here. And then there's one more filter on top of that, that again is part of my personal morning routine, and it's the high impact. Now, high impact is a filter on top of the breaking news. And this gives us, again, some even more proper and stronger insights to say, take a look. Dissent. Countries will have a finite timeline to shut down activities identified by Treasury, including closing Iran's bank branches abroad. So this is 19 hours ago. So we know if it's something that's 19 hours ago, it's not going to have a direct impact right now. We could sort through this, make sure we're not missing anything. Let's see, Trump making phone calls to world leaders with specific requests to cease their interactions with Iran. Again, 19 hours ago. And again, another headline proving to us that, hey, guess what? This isn't just an impact on the US. We're reaching to the world leaders. We're reaching everywhere. Now, when we talk about oil prices moving higher because of the whole Strait of Hormuz situation, you have to remember the US does not get oil from the strait. So you would think, well, then why would it have an impact? But because it has that global impact, guess what? China, Japan, some of the US's top trade partners get a majority of their oil from the Strait of Hormuz. 20% of the global oil supply comes directly from the strait. So that's why when we see headlines like 400% more traffic through the strait, oil prices decline. But then when we see headlines like the US puts up a blockade, Iran says they're closing the strait until further notice, something along those lines, we're going to see that impact on oil, which again will cause fear in the US markets, fear for inflation to rise. And guess what happens when inflation rises? The Fed has to shift their stance from holding to hawkish, which again means higher rates. Higher rates, it's more expensive to buy, more expensive to hold. People start selling. It's not just people, institutions, hedge funds. There is no point in holding something if it's more expensive. They could park their money somewhere else, like real yields. Awesome, guys. Keep the questions coming. Yes, sir. Good morning, guys. Good afternoon. Hello, everybody. Let's go. Let's break it down. I'm going to give you guys some price levels as well we could be trading off of. Like I mentioned, we are very bullish on gold. And what's cool with MRKT is it has this section down here, bias and calendar events. The bias on gold is bullish ranging. So price is moving sideways for now, but the bigger trend still holds. Now there's three types of trends that you're going to see using your market AI terminal. And it's bullish continuation, bullish ranging, and bullish reversal risk. When we're bullish continuation, that's when we're able to be a little bit more aggressive with our entries. We're not looking for those larger pullbacks. When we're bullish ranging like we see right now, we can look to see if we could pull back to a stronger point. And then bullish reversal risk, that's when we start seeing some higher headlines come out that could, and right down here, flip our bias. So that's why it's so important and it's so cool to use a tool like MRKT, because it keeps us in advance of what's going to happen, what could happen, and what's currently supporting bias. So right now we're bullish ranging. Now, does that mean I'm just going to start shorting gold? Absolutely not. I want to look for a stronger buy the dip opportunity. What's up, famous? Yes, sir, I do use order flow. So using a tool like MarketEdge.ai, it's separate from order flow. It's in a whole nother category of its own. This is a fundamental platform. Think of it like a Bloomberg, but for the retail trader, and it gets rid of all the extra noise. Plus, it's not a terminal that costs over $30,000 a year. This is a terminal that costs just $50 a month or $500 on the annual. And guess what? You use discount code CF for Chart Fanatics, you save 20%. It's only $40 a month. Guys, instead of having to sit in front of CNBC or Yahoo Finance, scroll through your phone, go through Twitter, try to find some headlines, listen to all these other people's opinions, market gives you facts. We want to trade these markets off of facts just like institutions do. We don't want to hear some Joe Schmo from online saying, oh, well, oil's coming down because Trump said so. That's not a fact. That's somebody's opinion. We want facts in the market because that's what markets actually move off of. Now, I want to come back to the bias and calendar events section down here. So what's supporting the bias on gold today? Diplomatic contacts aim to ease Iran tensions and reopen Hormuz. U.S. Treasury bond buyback expansion revives debasement trade. Central bank favors gold over U.S. Treasuries in reserve. Now, if you're looking at one of these headlines, whether you're looking at what's supporting or what could flip it, and you don't quite understand what's this mean, you could hit the explain icon. Let's use the central bank favors gold over U.S. Treasuries. Let's hit explain. Look how quick. First off, it doesn't take 5 minutes to load. That just took 0.1 second. Sometimes it takes a second, but that was crazy quick. Market tries to stay on top of things. Risk off for dollar assets, risk on for gold. Now, risk off means, if anybody here doesn't know what risk off and risk on means, risk off means people are taking risk off of the table. That means they're taking their money out. That would be a short narrative. When it's risk on, think of it like this. I want to put money in there. I'm going to risk my money because I think we're going higher. Not because I think, but because I know our fundamentals are supporting that bias. So risk on for gold and other hard hedges. If central banks structurally refer gold to U.S. Treasuries, marginal reserve flows shift away from USTs, pressuring long end yields. So that's something to note too. We're talking about gold. We're going through the headlines. If something pressures long end yields and yields start moving lower, that's also a bullish sentiment for things like the S&P and NASDAQ too. And reinforces skepticism about U.S. fiscal sustainability. This supports a higher floor for gold, persistent bid for commodity hedges, and a weaker, more volatile USD, with markets watching reserve data and official sector flows for confirmation. So when we talk about official sector flows, we do want to look to see is the USD, which we would look at an index like the DXY, which is the dollar index. Is that moving lower to help support gold moving higher? Awesome, guys. If you have any questions, man, let me know in the comments. This has been a beautiful breakdown so far, and we haven't even gone to my favorite tool yet, which is Ask Market. Now, I do want to show you, this is just, guys, we just grazed the surface of what this tool has. So it gives you whatever other asset you're looking at, gives you price target levels, support areas, possible trade scenarios with these arrows. You could hit the settings icon and you could customize this all you want. You could even customize the colors of the chart settings. Look at this. We could change the colors, make it something that suits you. You could also add drawings. So let's say we want to add drawings. We want to add a rectangle tool, found resistance up here, found maybe support right over here. I see a demand area right here. I'd like to see price support. Look at that. I found my own support zone. Yes, MRKT will give you those support areas too, but we don't want to be so dependent and so blind to say, okay, I'm just going to wait for a random market level. We want to do our own technical analysis, do our own due diligence, and use MRKT to be our fundamental pat on the shoulder to say, you're looking at the right thing and you're looking at the right bias. So guys, that is a quick little brief over the dashboard here, and there's still more that we did not cover. So over here we have our calendar events for GC. Now what's great with that and what's great with market as well, and what really won me over when we started and we were building out MRKT, is how great the economic calendar is. It is like a Forex factory on steroids, just pumping super strong, how to actually read these fundamentals and how to actually read these types of trends. So let's take a look. Tuesday, August 25th, 10 a.m., we have consumer confidence. Now, consumer confidence isn't a strong report like a CPI, a PPI, a PCE, non-farm payroll, unemployment. These are major economic events that have a direct impact on the Fed's monetary policy, which means if they're hawkish or dovish. Consumer confidence gives us some insight, and what's cool is we could click the little analysis icon right here and it pulls up some information. Key input for central bank rate decisions, signals overall economic strength and trends, high impact released, often moves currencies on surprise. So if we come out, take a look right here, forecast is 90.1, bank forecast is also 90.1, prior was 90.8, and then what's most important is it gives us our minimum and maximum. when we take a look at our minimum, which is 88, and our maximum, which is 92.8, we could then hit that analysis icon again, and we could look at our playbook. Our playbook's actually going to be just that, our playbook into whatever asset we're looking at. So if we could change this to impact on, it's usually standard to USD. Let's change it to gold. If we come out above that 92.8, that's a very bearish reaction on gold. If we come out below, that's going to be a very bullish reaction on gold. So there we go. We have a playbook off of our fundamentals. Now, again, we want to go to our chart and find our technicals to make sure everything co-aligns. When we find our chart, we find our levels, and everything starts complementing each other, that's when we find those A+ and high probability setups. I call it, I'm pretty sure I mentioned it last time I was here with you guys, the and factor. You want to be finding trade setups that have confluence. You want to say, okay, we have support and our fundamental bias is bullish. And maybe it's a low volume shelf, right? We want to find these and factors. So let's take a look at the chart here on gold. And something else to mention, MRKT does have a Chrome extension. So you could look at your live news tab, your breaking news right here while you're looking at TradingView. You don't need a whole separate monitor to look at MRKT. You could have it right on the same chart that you're using your TradingView. So breaking news, US ADP jobs report shows 11.75K change versus 9.5 previous. Okay, now we can look at our calendar, see if anything's over there as well. Again, sparkle icon brings us that information. And then bias, let's look at our bias on gold. We already know we're bullish ranging. So guess what? Does that mean I'm going to look at a red daily candle right here that's still forming and I'm just going to try to jump in some shorts? Absolutely not. I want to look at this overall trend that's been extremely strong. Like I mentioned at the beginning of the episode, from June lows, we are up over 18% on gold. You cannot argue and say gold is still bearish just because it's off of those all-time highs. You have to look at the relative price action, right? Everything is relative and perspective is key. So when we look at the current trend and the current bullish momentum we're seeing on gold, not only are we breaking out, but we're breaking out with volume. Look at the volume increase right here. This is strong, sustainable volume. When volume complements trend, that's when we know this is a true trend. Whereas when we saw a breakout over here where we tried to break higher, look at how insignificant the volume was. It was a fake out. What happened? It failed. So what happened over here? We had this huge day. This was an FOMC day. Things were looking a lot more bullish for the market, for gold, because they were saying we don't have to hike rates. Things could stay easy. Inflation is cooler now. We don't have to hike rates this year. And the odds of a rate hike went from about 60 to 65% in September all the way down to about 40%, which is phenomenal. It gave gold the boost it needed, broke out of its month-and-a-half range, broke out with volume, and gave us continuation. So now we can say confidently that we're trending higher on gold. So we're looking at the daily time frame. I'm a big fan of marking out previous day high and previous day low. I'm also a fan of marking out today's current open price, which if you're trading futures, your open price is going to be at 6 p.m. Eastern the previous day. So because today is Tuesday, the market's opened. I'm sure you guys understand and know this by now. The futures market closes at 5 p.m. Eastern and then reopens an hour later at 6 p.m. Eastern. When the market reopens at 6 p.m. Eastern on Monday, that's technically Tuesday's candle until 5 p.m. on Tuesday when markets close again. So because I see we're currently red on the day, this gives me the opportunity and the insight to say, okay, this might be a good buy the dip opportunity because I know we're bullish and ranging. So because we're coming near the bottom of our range, we could come down to some lower time frames and see, well, how do you like that? I found a support area. Now, this is something I found in my pre-market setup. Found support over here. This was Sunday overnight. We supported this level again yesterday, Monday during the day. And look at this overnight session. We found support again. So buyers are actively defending this zone between 46.53 and 46.83. So I used my fundamentals to help give me confirmation of a bullish bias and buying the dip on gold. Guys, if this makes sense, drop a W. Tell me if you learned something so far. I'm always here. I'm here on the Market in the Morning stream for the Market AI team as well, Monday through Friday, going through analysis, giving you guys breakdowns like this and areas to watch. Now, because we're not going to be trading, for the most part, a lot of people don't trade on the hourly. We want to find our higher time frame zones because that shows a lot more strength and significance than a lower time frame zone. So we find our higher time frame level. Let's say we mark out a pre-market low level, which is right here at 46.70, and we could look to see if we get a reaction here. So let's see on a lower time frame, even a 15-minute, right? We can see how do we want to react. Do markets want to start pushing lower? We break pre-market low, and then guess what happens when we break a pre-market low like this, guys? All of retail who doesn't quite understand fundamentals, who doesn't quite understand to zoom out on a higher time frame chart, they're looking at this. Let me turn the drawings off so you guys can see. They're looking at this. Let's say we sweep that low, and they're like, wow, gold just sold off overnight. We're breaking pre-market low. I have to short this. They're selling the low of a bullish range. We, on the other hand, have that advantage and have that edge to say, no, actually, this is a phenomenal buying opportunity because we'd rather buy the dip, buy somewhere over here, so we can look to hold till we trend back higher. We've already broken our previous day high overnight, so it's much easier for price to return to levels it's been at before than for price to break out and continue. So one of the main setups I'm looking for today myself is, yes, a push into this demand area. Whether we start holding above that pre-market low, I could look for a setup. And again, look at this risk reward on this trade, 5-1. That's the type of trade that you could take, possibly get stopped out, take it as a paper cut, and move on to your next setup. Let's say we do take this trade, we do get stopped out. Okay, well, let's see how we react to that next level. Once we do start reacting, we get another trade set up. Guess what? You just bought a lower opportunity, same price target. Your risk reward went from 5-1 to 6-1. Even if it stayed at 5-1, guess what? That 5-1 is going to make up for the loss and then some. You should never put yourself in a position where if you take 2 or 3 losses in a row that you're freaking out, you're like, oh my goodness, I'm going to blow my account. I can't believe it. Then guess what happens when you're in that position? Bad psychology picks up and you start full porting. You start going against your trend. You start going against your rules. You have to treat your prop firms like they're real accounts. A lot of people have the idea of, oh, well, if I blow it, I'll just get another one. That is poor psychology. You do want to treat these accounts just like they're your own money. So when you do get onto the funded account, you're prepared and not really making any changes to your trading style. Now, yes, evals, if you do already have an edge, sure, maybe size up a little more accordingly. But you don't want to just be flippantly one trade to pass or one trade to fail, right? You want to be consistent with what you do. So that's our breakdown on gold today, guys. Absolutely amazing so far. Let's take a look at the S&P and NASDAQ. So I'll be looking for this level on gold today. And now what's great, let's go through our S&P and NASDAQ, and we're going to be using our market add-on over here. Let's look at NQ. Now NASDAQ has had a bit more relative weakness. So I am going to see, and let's start with our daily time frame again. Do we have our previous day high, our previous day low? And look at the NASDAQ, sold off about 4% from those recent highs. And what I like to look for, and what you guys should keep an eye on as well when looking at assets like the NASDAQ and S&P 500, is specific pullback levels. Like the level I have marked out right here around 29,550, that is a 5% pullback from all-time highs. The next level we have is the 10% pullback from all-time highs. Look at what happened when we dipped below that 5%. We had FOMC, and on that same Wednesday, we had really strong earnings from Microsoft and Amazon, which gave us optimism into the market. Then what happened? Boom, we moved up over 4% in a single day. Guys, that's called a catalyst. Markets cannot reverse price without a catalyst. Markets can't give us a 4% move in a single day without a catalyst. There has to be some type of headline. An example of this again, right over here. NASDAQ sold off from high to low that day, over 5%. It didn't just sell off because people felt like selling. This day we sold off because of non-farm payroll and unemployment suggested the Fed should hike rates. So these data events, these economic events that come out, it's so important that we understand how they work because it's going to give us that insight and clarity. And using a tool as cheap as MRKT gives you that advantage, gives you that insight that other traders who aren't using it, who think that Forex Factory is enough, or even TradingView. I believe TradingView also has an economic calendar too. But what's it really give you? It gives you the forecast, the prior, and then the actual when it comes out. That's not enough to give you it's not giving you a playbook. It's not giving you how it's impacting the Fed. It's not giving you anything that's relatively significant enough to give you that follow through. So on the NASDAQ, I would be looking for some continuation to the downside. I would like to see us pull back. So we marked out that previous day high, which is up here. I do have a resistance point right above that at this 2 hour. I'd like to see a bit of the same situation that we were looking at on gold when we break into that previous pre-market low. Retail thinks we have to sell it when really it's the better buying opportunity. I want to see if NASDAQ can start breaking its previous day high. And again, retail who are unaware of resistance, unaware of general trend, they think that's a breakout. Oh, we broke previous day high, we have to be bullish. What happens to those traders who assume something as small as that? They get crushed. They get in and immediately go into drawdown. We don't want to be those traders. We want to be knowledgeable and we want to have proper insights. So we're looking for a sweep, hit that resistance point, pull back and sell off. Over the past few days, every time we do come into that area, 200-point sell-off, another 300-point sell-off. So yeah, there are active sellers protecting their positions up here. That's what I'm looking for to continue. Now, I'm sure you guys just saw that, but what's cool with the Market AI add-on with the Chrome extension is when a news headline comes out that's breaking news, you could turn on headline notification and it actually pops up on your screen. So you could keep Market like this, or it's the little bubble add-on, and it's still going to show you when a breaking news headline comes out. So you're not caught off sides. And that's going to give you that extra insight and clarity to say, oh shoot, look at that. Trump just said A, B, and C about Iran, or Iran decided to close the strait indefinitely. That's going to have a bullish impact on oil. It's going to have a bearish impact on NASDAQ, on gold, on the S&P. So there you go. Great breakdown. Yes, sir. Yes, sir. I got you, Famous. My pleasure, man. Guys, any assets, any tickers you want me to cover, let me know. And you guys get access to this tool for 20% off with code CF. That is Chart Fanatics. Awesome, guys. Great breakdown. And now I'm going to show you one of the sickest features that we added recently. It is called Ask Market. Think of it like a ChatGPT or a Gemini or Claude, but for stock market. So what's better, what makes MRKT Edge, MarketEdge.ai, and what makes Ask Market that much better than using a ChatGPT for your market structure and for a breakdown of what's going on is because ChatGPT, Gemini, they're connected to search engines like Google. Guess what's going to happen? It's not going to pull just information. It's going to pull opinions. We spoke about that earlier. We don't want to hear people's opinions. We want to hear facts. We want to know what's really driving markets. So we could ask it anything. I could ask it, do we have any red folder news coming up? How can I prepare for trading today? And it does have pre-built questions too. So morning briefing, if I click morning briefing right here, guess what? It's going to give me my morning briefing on my 3 top equities that I like to trade. It reads market sentiment, searches any headlines, and just like that, while I'm talking, 5 seconds, it pulls up a chart. It pulls up the headlines. It pulls up the bias, everything I might need and you might need to prepare for the day without doing so much research, right? You're not sitting here on Google. You're not going through news headlines. You are consistently using a tool that actually gives you a valid edge on the fundamental side of the market. ES, S&P 500, sentiment is leaning bullish, ranging at 77.04, target 77.60, pullback 76.55. Treasury buybacks and softer oil are supporting. Watch for Iran sanctions and tariff escalations to flip it. Right there, guys. I didn't say it before, But tariffs have started to circulate again. I'm sure you guys have seen, and if you haven't, it's probably because you don't use MRKT. But yesterday, Trump announced a possible 50% increase in tariffs on a lot of Canadian goods. What happened the last time Trump announced new tariffs, right? This was over a year ago. Markets absolutely tanked because what happens when there are new tariffs or something new happens to the economy or the global economy, what happens is uncertainty enters the table. Now, there are three emotions markets move off of: uncertainty, optimism, and surprise. Optimism is going to give you just that optimism. People are risk on, people are happy, people are buying because there's optimism that something good is going to happen, whether it's optimism that we get a rate cut, optimism that earnings reports came out very strong, so the companies are doing well on their ROI, so their investors are happy. Uncertainty. When we get a new headline, when the Iran war started and markets started to sell off, because markets don't know. Institutions, investors, hedge funds, not day traders. Day traders don't move markets, but the institutions, the investors with millions to billions that are invested, they start becoming risk off. If you had $5 million into Amazon, and all of a sudden we hear new tariffs hitting globally, guess what that means? That means there are most likely going to be higher imports and exports. Guess what that means? That means margin compression. When there's margin compression, guess what? The investors get a little shaky because now the company's not making the same ROI as it was making before on those products. So what do investors do? They pull out, they look for a safe haven, they look for somewhere better to park their money. Awesome. Beautiful. Beautiful. Guys, NASDAQ also, let's see, overnight ADP, lifting rate cut hopes. Beautiful. ADP payrolls printed weak, 11.75K versus 9.5K prior, lifting rate cut hopes. But the 4-week average muddies the signal. Canada and U.S. auto trade tensions escalated. Minister says Canada aims to be top partner, particularly in auto sector. And Trump intensifies Iran rhetoric, failing to pay military, killing protesters at unprecedented levels. So again, this is an uncertain headline, which again, you don't have to go through all the headlines to try to find. You could look at the filter breaking news, you could look at the filter of the high impact, and of course, you could just ask market and it's going to pull up those best and top headlines for you. NASDAQ sentiment is leaning bullish and ranging. 29,377, target 29,750, pull back 29,000 even. That's a key psychological level. Think of when you hear key psychological level, it's any level that ends in those double zeros or even like a 50. And if you're looking at the S&P 500, it could also be those 25 increments too. And those key psych levels are considered key psychological points because no matter what strategy you trade, no matter what hedge fund is trading, what algo, these full and whole numbers are psychological points being recognized around the world, around the nation. AI investment surge and cooling inflation support, higher yields and oil-driven inflation risk pressure valuation. So that is still on the table. We are not completely in the clear yet, and that is why we're seeing a bit more of a bearish sentiment over the past week. Gold future sentiment is leaning bullish, reversal risk at 46.89, target 47.60, pullback 46.05, treasury buyback, debasement trade, and central bank buying support. U.S.-Iran sanctions intensify, and Hormuz tanker risk can flip it. Then it even pulls up 10 headlines. Pulls up, it's not always going to be 10, could be 5, could be 20. It's going to pull up headlines that are relevant to what you're looking for. And you could ask market anything, guys. I want you to comment some type of question that you want to know about markets, and I will ask market for you and show you exactly how it works. Awesome, guys. Amazing stream. Another great tool that MRKT does have, this is called the backtest fundamentals, and I'll show you guys this as some of you type some questions you want me to ask market. And let's say we see a big drop here on the ES. Well, okay, what drove that move? Well, you could click the candle and it's actually going to break down what happened in that hour increment, or if you're on the 4 hour, what happened in that 4 hour. So pre-market risk off drift as bond yields resume climb and stocks soften. So if we know yields are climbing higher, we know that has a bearish impact on stocks. Why and how do we know that? Because we use MRKT, because you tune into these streams, because you stay educated and you're not just trading a 30-minute orb, and that's all I trade. You have to have some type of understanding, because guess what? You could trade a 15-minute orb, a 30-minute orb, an initial balance, a moving average, but if you keep trying to take longs in a more bearish market environment, you're just going to keep getting stopped out. US opened near 77.32 and sold steadily to test 77.04 area on elevated pre-market volume as rising yields and softer global equity tone drove risk off positioning and de-risking ahead of upcoming US jobless claims data. Awesome, guys. Fantastic. Fantastic. It has an economy tab too. Now, I really like the economy tab. I feel like this is one of the more slept on tools in MRKT, because what's great with this is it actually gives you a chart of some of the economic data. So we can see, is there any trend going on in our inflation? Is there any trend going on in our employment data? No, so guys, MRKT, it's not free, but it's not going to cost you an arm and a leg. To get this type of fundamental data, you used to need either a Bloomberg terminal or something extremely advanced and expensive. Bloomberg can be up to $25,000 to $30,000 a year, $2,000 to $3,000 a month. MRKT is just $50 a month, and if you use code CF, Chart Fanatics CF, you save 20%. That's $40 a month to give yourself an edge. Put that in perspective of how many evals you get. If you buy even more than 2 evals a month, you're already spending way more than market. Why not take some of that money and invest it into your own knowledge, invest it into your own education, invest it into a proper edge of what's moving markets? It's totally worth it, guys, 1,000%. And we do have an annual, which is only $500, and again, 20% off of that $500. Does that bring it down to like $450? That's a great sale right there. That's amazing. Amazing, guys. Or even, I think 400. I'm not doing the math off the top of my head. I'm too fundamentally driven right now to be doing that. So inflation, what do we see with inflation? Well, we could see on our chart right here that we were as low as 2.4% back in February. Now, the Fed has an inflation target of 2%. So we were very close to that Fed target. That puts optimism on the table that, hey, the Fed could probably cut rates soon because we're really getting there. Inflation staying low. Then what happens? Iran war picks up. Oil starts skyrocketing. And guess what happens? Inflation didn't just go up because oil's higher. Oil's higher, which created the snowball effect into higher energy costs, into higher imports and exports, into higher consumer costs. And that's what led to inflation moving higher. Inflation went from 2.4% in February, the highs of 4.2% in May. 4.2%, over double what the Fed's target is. That's a massive incline in inflation. Since May, June, what happened? Oil sold off because in June we got, I actually believe it was like late May into June, we had the ceasefire deal. Everybody's happy, hooray, hooray. Inflation starts coming down because oil starts becoming less in price, energy gets cheaper, and we're headed back to the right direction. But what happened, we went from 4.2 to 3.5. Our expectation for this 3.5 reading in June was 3.8. So we were lower than expected. Inflation was cooler than anticipated, which gave us a skyrocket, a beautiful trending day, and that catalyst that markets needed to reverse. But what happened from June to July, oil picked back up again. It still stayed lower than previous highs, but it started to elevate again. So instead of going from 4.2 to 3.5 to 3.2 and steadily making its way lower, it went from 3.5 to 3.4. Barely moved, right on expectations, but barely moving. Still supporting because it didn't move higher, but we're starting to see a bit of a slowdown. Awesome, guys. Beautiful. Beautiful. Let me know if you have any questions on this so far. This has been a phenomenal stream. Really great. What moving average has the highest probability in this market? So you can't really, that's definitely not the right question to ask for a fundamental tool. Moving averages are all, not to say subjective, but they can be a little bit subjective in a sense of, oh, I use the 9, I use the 20, we're below the 20, but we're above the 9. How do I trade this? And sort of force trades. So you want to use a tool like MRKT to gain that actual fundamental bias. So instead of trying to argue with yourself of this tool says this tool says that, you actually know the facts behind the market. And that's going to keep you on the right side a lot longer than some type of moving average does. I'm not saying moving averages are untradeable. Everything in the market is tradable. Markets have been around since the 1700s. But guess what? Everything has an edge. And I always say this, every strategy works in the market, just like no strategy works in the market. What I mean by that is if you have proper risk management, you create proper foundation, you give yourself the opportunity to do this top-down analysis like you saw me do this morning here on gold and NASDAQ, you get a good edge on the fundamentals that are moving markets as well, you will be a successful trader. If you have poor risk management, you're jumping in and out of trades, you're guessing direction, you're forcing trades when you shouldn't, then it doesn't matter what strategy you trade. You could have a 90% win rate strategy and still be unprofitable if you're letting your losses get too wide. If you're cutting your winners way too short. So we want to stay ahead of the curve. We want to do the right thing. We want to have proper risk management. Trading is like building a house. You don't just throw up a couple walls and call it a day. You need you need the blueprint, you need the foundation, you need the walls, you need your windows, you need your support beams, and you need your roof. Trading's the same way. You need some fundamentals to understand your blueprint. You need the walls to be your strategy. You need your support beams to be your risk management. And everything starts coming together. You can't just be like, I trade the orb. If we break down, I'm selling. Well, guess what? We could have a double break and you just sold the low and now we're moving higher. Whereas if you trade the orb, we break down first, but you know we're more of a bullish ranging or bullish trending, then you know that breakdown is most likely giving you a buying opportunity. So do your top-down analysis. Have your house steadily built. Don't just throw up walls and hope it stays. Build your core foundation of your home, of your trading house. Awesome, guys. Yeah, everything has a probability. Everything does have a probability, of course, absolutely. And when you start stacking confluences, your probabilities increase. I call it the and factor, and that would be something like looking for NASDAQ longs at demand down here. Let's say I'm looking for longs down here because we have a 4-hour demand zone, right? And let's say we also have a gamma level there. And it's also our opening price level, right? I just named 3 and factors to why price might react to this level. Whereas if I'm just looking at pre-market high right here, what's that really give me? I'm looking for a sweep of pre-market high and a reversal. That's one confluence. That is lower probability. You want to have that and factor that you're looking for multiple confluences, higher probability. And you have to try to have one of those and factors being the fundamental bias is on your side. That's going to really help elevate your trading game, I promise. All right, guys, if you haven't already, man, smash that like button. Give us an example of a question that might help a trade. That's tough, man. I mean, let's do new chat, see what we can ask it. We can ask it, how can we prepare for the next CPI report? Now, we could either type it out, or we could go, how can I prepare for the next CPI report, and what could be impacting it? And how have the previous reports been? Transcribes. There we go. I hit send. And I can look up at the sky, and before I even know it, it's giving me an answer. I'll pull the upcoming CPI schedule, the historical trend, and build you an actual plan based on the current market pricing and sentiment. Now I'll get the CPI playbook and current market conditions to build the scenarios. Look at this. It even gives you an odds. Beautiful. Is this market on TradingView? My apologies. No, so this is MRKT MarketEdge.ai. This is the actual application itself. This is where you will find things like Ask Market and a lot of these other tools. There is also a Market TV tab. That's where we do go live, and we have other live streams available too. And hey, guess what? I'm going to come back to Ask Market. But hey, look, this is where you could catch me live every day. You could even look at, wait a minute, I know these guys. Now I don't want to create a loop, so I'll get out of this. But very cool, very helpful stuff right there. Extremely great platform. I love to use it every day. You can look at your history of your chats. Let's go back to our CPI report here. And let's see. Look at this. Look at this breakdown, man. How to prepare. Hotter than forecast. Upside surprise. Hawkish USD breakout via rising real yields. Dollar strength into 34% hike price scenario. Gold and equities pressured as real yields spike. Watch for confirmation above key resistance zones. Sticky inflation derails any dovish pivot hope. So if we come in higher than expected on CPI, that is going to crush any expectations of a dovish pivot. Now, if you don't understand the difference between dovish and hawkish, I'm going to explain it in about 5 seconds right here. Hawkish is when they're hiking rates. Hawks fly high. High, hawkish, H. We do not want that. We do not want higher rates. That is more bearish on the market, more bearish on gold. Makes it more expensive to be risk on. Dovish, diving. Dovish, diving. We're cutting rates. So we want doves, right? Doves are like at a wedding. We want doves. We don't want hawks. Hawks are going to pick up our little dog on the corner of the street. Hawkish is bearish because they're hiking rates. Dovish is bullish because they're cutting rates. When we cut rates, things get cheaper. Things get cheaper to purchase. In line with forecast, 3.4%. So this is what happens if we come right in line as expectations. Neutral chop. If things come in line on expectations, guess what? It's in the phrase right there. On expectations, I'm sure you guys have heard the phrase before, markets are pricing in expectations. Whereas if we get a surprise, that would be upside surprise, downside surprise. That's when we start getting a shift and a stronger move. But if we come on as expectations or on expectations, we do not want to expect some type of strong trend. It will most likely lead to one of those ranging days. I'm sure you guys have seen on social media tons of, I call them content traders on like Instagram and stuff, who just like tell you, put a buy limit above price, put a sell limit below price, and that's how you pass your evals on CPI. Guess what? There's a few things wrong with that. One, that's not a repeatable thing. You can't make money in that in the long run. Two, if we come out unexpected, guess what? We're going to wick your entry and then stop you out immediately. Or wick your entry to the downside and stop you out immediately. Don't become liquidity because you can't be patient enough to actually read a report and have an edge. There is zero edge to putting buy limit, sell limit. So read the markets and understand the markets. Hey, what's up, Elsa? Good morning. Yeah, this is really cool. If you can help with just one trade, it can pay. Yeah, exactly. If it can help with just one trade and pay for itself. So it's technically free. That's Sleeping Dolphin, W to you. That is a great way to put it. And I got to say, that's sort of exactly the way I've been using it, because, yeah, it will help you with those trades. It will help you stay on the right side of the market. So make sure you like and subscribe, guys, if you have learned something today. This has been a phenomenal stream. We've got just a couple more minutes here, but really, really great breakdown. Really great breakdown of how to use MRKT and also some proper insights and education to help keep you guys knowledgeable. Remember, I'm sure you guys have heard this as a kid, maybe even in like elementary or primary school, where they say knowledge is power. Guess what? When we're trading fundamentals and we're trading financial markets, we're not just trading candles. Knowledge is most definitely power. So we want to use a tool like market to give us that power. W's right there, man. W's in the chat. I love that. Absolutely love to see things play out like this. Beautiful. I love going live streaming, giving you guys some breakdowns. If you guys want me to cover any tickers last minute, please let me know. I will be looking for NASDAQ possible longs off of that open price, off of that key level, off of that 4-hour support zone, higher time frame. Gold, I was looking to see, can we find support in this demand area? We have found support here multiple times, and gold, other than the NASDAQ and ES, gold has a lot more of a significantly stronger trend. How do I know that? Well, one, I used MRKT, but two, I also know how to use my own technical analysis. And my technical analysis is screaming, why would I try to short this? We do not want to be the trader that tries to jump in front of, think of this like a moving bus, right? I always say markets are like a driving car. Cars need to park for gas. And when cars park for gas, or the market parks for gas, guess what? We drove, we went sideways to fill up the tank, which is the volume, and then we drove again. So I want to see this now as an internal, a lower time frame. We're pulling back for gas, we're picking up some volume, we sweep a possible low, and guess what? Markets just filled up on volume. Now we're able to continue the trend. We're trading with the trend. We're not trying to catch the high. We're not jumping in front of a moving bus of a trend that's up 16% from just 22 days, 16 trading days right there. And we're also not the trader to try to say, oh, this is where gold turns around, right? We don't want to be the trader that's trying to predict the highs. We're trying to predict the lows, or else guess what? On this full move to the downside here, instead of capitalizing on short positions, you would have been like, oh, this gold had a major sell-off right here. Now it's pumping. I got to buy it because this is a buying opportunity. No, the fundamentals would have told you why we sold off and to stay out of markets because things are starting to shift. We pulled back a little bit. Those buyers, let's say they did swing trade and they got into some profit. They would have thought, I knew it, I'm so right. And guess what happens? Look at how strong the sell-offs are compared to the pumps, right? We have a massive sell-off here, over 7% in the intraday. Another sell-off here, 3%. And then we have this trend right here for 9 bars, 9 trading days in a row. Imagine trying to buy every single time you saw a gold break lower and you just got stopped out time and time again. That is trading on the wrong side of the market. That is trying to predict the market. That is trying to think that you're right and the market is wrong. There's a saying in the market, and that is that we are trading against some of the smartest people in the world. Guess what? I don't want to trade against the smartest people in the world. I want to trade with the smartest people in the world. And using a tool like Market, not a GPT, not a Claude, will give you that insight, will give you that extra clarity and that extra almost stress relief to know, okay, I am on the right side. Okay, I'm shorting gold over here. Well, I'm not really selling the low because the overall trend is bearish. I'm just following the trend. And that would have paid you off extremely, extremely well. Now, I mentioned before about key psychological levels, right? I want to show you exactly where gold started to reverse. I'm going to take my measurement tool, pull it down over here, and would you look at that? Negative 30%. That's where gold started to reverse. That's where institutions found gold was at a much better buying opportunity. And bang, love to see it. Yeah, fake Instagram trading, be like, I copy, trade, and profit and enjoy the day. Yeah, you know, you want to be realistic, right? That's why I call them content traders. They'll tell you, you know, buy limit here, sell limit here, or they'll only show you their winning days. Like, we got to be transparent. Not every day is going to be a green day. You have to be able to take losses just like you could take wins. Guys, I believe that's a wrap to our market in the morning stream here. You guys let me know on the back end, but I believe we have hit our time. This has been a great stream. I want you guys to smash that like button if you haven't already. Follow us on social media is marketinsights.ai. You can follow me on Instagram as well as Trading with Kev. Post trading content daily to keep you guys ahead of the market. This has been a phenomenal stream. Chart Fanatics, thank you for having me here. Thank you for hosting us here with Market AI. This has been a phenomenal episode. I hope you all learned something. I hope you guys will take advantage of using a tool like MRKT to help give you that insight and help you price in what's going on in the market. Because if you're not pricing it in, you're only going to hear about markets priced it in already when it's too late. So guys, have a great rest of your day. Trade carefully and never risk more than you're willing to lose. Take care.
everybody. Okay, I'm back. And can I have my screen sharing up, please? How everybody doing today? Okay, so 23 minutes before the market open. This is my screen right now. Let's take a quick look. Do our pre-market plan together before the market open. So if anyone's news here and don't know who I am and what strategy I trade, I do order flow, auction market theory, and option flow. Right. So for pre-market plan, I usually use option flow level, gamma exposure level with volume profile to mark out the level of my interest. And I'm too okay. Let's take a look at the overnight inventory. Look at the volume profile. In the overnight session, we can see a really nice rally to the upside. We are above the high volume 0 day to expire. So I'm leaning more into a positive gamma region for us today. Right. So there could be a lot of mean reversal. We are above the put support and also the core resistance. So this is an interesting level that we're gonna watch. So I'm gonna mark this out first. And we tap into the gamma exposure 2. Since reject there 3 times. So it will be another interesting level that we're gonna watch. It's been building a significant amount of volume at this upside level. So we can call this another balance range where it's able to build a good amount of volume and value in it. Uh, on the downside level, the put support and the plus 1.5 look decent. So it would be another support range. We got the overnight value area low with the gamma exposure 3. So I'm gonna put them together here. That's another support level. That pretty much it for us today. Let's look at this one, which is the RTH regular trading hour volume profile from the previous day. We got the value area high sitting at 29,200 and the value area lows 29,050. So let's take a look over here. 29,200. So this range right here will be the previous day value area high. In the overnight session, we able break above yesterday value area high, and we started to test out right the next level to the upside. Right now we're sitting at around 300 and 400, which is right here. 300 is last week, Friday and Thursday value area low. It acts as a support Now, when we above it, so what I'm gauging in is when the market open, watching if the market able to hold above the value area high right here and the 29,300. If it's able to hold, then I can look for a long target again my exposure to. But if it's break down to the downside, then I could look for a retest and then continuation to the downside. And my level of interest will be the core resistance with this supply spot 10 level with a VWAP ETH. And if it's open, go straight up and see how it's react to the gamma exposure to. Then the next level will be these level or reversal back to the downside, at least to the value area high. Next level is here. That's probably it for what I'm watching for today. Nothing too crazy, real simple. Was this handsome though? You know, watch. What's good, Daniel? What's good, Ali? Morning, bro. What time frame do you use? Uh, for me, I will use 1 minute for this chart. On the other chart, when I have a deeper look into the order flow, then I usually use this one. This is a 1 minute, also 1 minute chart, but there's a footprint and also the delta, right? I also add this stack imbalance right here. This is one of my favorite setup using order flow to mark out the level of my interest. And the other one will be the 40 range chart. All right, the 40 range chart is whenever the market be able to make a move, like 10-point move, either to the upside or to the downside, is going to print out another candle, and it's going to tell you how much volatility is in there. You guys can use either the 40 range chart or the volume chart, right? If 1 minute and it's only prints out one candle, that's mean the market is slow, right? But if in 1 minute it prints out 5 candle or 10 candle, that's mean the market are the volatility of the market are accelerating, right? And also on for the range chart, we have the delta right here to see who is more aggressive at each level. So that is what I have for the chart. Do you manually add your GEX level to deep chart? Every morning I will have a bot to create out all of these gamma exposure level, which I send it in my Discord for free every morning. What's good? Yeah. How's everybody weeks doing? Anyone go to school? College or anything? Where could we enjoy this or in your Instagram? My Instagram is chart fanatic. Put the name on it too. At TUTM Chow. No school, bro. I'm 46. Oh well, with grandkid every time. No way. You're 46 and you have grandkids already. How many do you got? Six already? Hey, that's nice, man. Or good, two boys. Okay, market closer to the open. We can see the value area shift above. Then we could have another level right here. I have my first sell at 17. Okay. What's up, stable? How we doing? Holy family. I had my first son at 17. Damn. Wait, you 46? So you born in 1980? Damn. So are you planning to teach your grandkids to trade? That could be awesome. Not gonna lie. Grandpa teaching grandkid how to day trade. Oh, this camera is not. Okay. The next level you post on Discord, how can you copy on trading views? Uh, I I think you will, if you want, you can copy and download it, send it to it's need to be a vi code, so I don't have that yet. To the level 29 to 30. and 250 is a good reaction point to. Uh, yeah, this is a level that I'm gauging in. Okay, 9 minutes before the market open, I'm gonna have my first guess. This is gonna form this balance range for a little bit. Um, and then either market going to have a move either to the upside, could be the upside, and then would trap buyer, and then mean reversal go straight down to this level right here. This looks so nice that this look like it could act as a magnet level. So could you please show your imbalance trader tracker setting? Yeah, here. That will be on this chart. Imbalance tracker. Right. Setting. Imbalance must be diagonal, right? Minimum 300, 3-to-1 ratio. And then I also include 0 on imbalance, and minimum number of consecutive is 3, and the tick gripping tick is 4. On the plot setting, the number extended bar, I got it at 100. Live width is 1. Reset mode, none. Zone extra tick, 0. And you can edit the color the way you want. Enable trigger zone, and I don't touch the fuel time and alert. I just touch the imbalance setting and the plot setting. That's all I do. Good morning, Taha. What's up, Slovak? Hope to get a lower, shorter from the top. Oh, you in a short already? Bino. Okay, I'm gonna just wait and sit until the market open. 6 minutes till the market open. Okay. $230 to $250 could go for long, in my opinion. Yeah. Okay. Everybody is gauging at this level, right? It's a good level. What's up? This is dropping hard. Yeah, let's see. I think it's going to consolidate until the market open. Could make a good move. We're not going to touch anything. Wait for how the market react. Okay, start making a move to the downside. Let's see. Let's see. Get about to open. I think it should drop to here. Okay, 1 minute until the market open. Like, get your water, drink some water, guys. Stay hydrated. I'm sure. Okay. Short, London lows. Okay. If it's dumb, I really look for the market to have a nice retracement down to at least to the 150 or 240. Let's see. Okay. Nice. Yeah, I'm gonna let the market play out for a little bit. Sin is sitting at nowhere, not at the level of my interest at all. Alright, so I don't need to jump in a tray. TH1, right? Yeah. Let me. After we finish, we use the volume profile for the overnight inventory. I usually delete it, don't need it anymore, and I just make another one for the RTH session. here. Stand it. Might be too much for anyone who tried to look. Can you explain that left side indicator? How do you read and make decision to take the trade? Do you mean this one? Volume profile? Is that what you're asking for? Okay, the volume profile is just showing you the distribution of volume between the buy and selling activity for the market participant. So if there's a lot of volume on this things right here, that's mean a lot of order being transact at this specific level already. So more people willing to buy and sell this price. So it more like a fair price, right? But if there's a low amount of volume, that means there's not a lot of interest to buy and sell on this one. Usually, if we see a strong move to the upside with low volume, people in order flow community, we will call it low volume note, right? That's mean the aggression from from the buyer are more aggressive, right? And there's no interest to sell at these level for the seller, right? They don't want to sell at these price, but they want to sell at a higher price. That is what make the low volume note, right? So we know that at these level, buyer are really aggressive and tend to hold whenever the market come back and retest, and we can look at that, have a better picture of who is more aggressive, right? By seeing the ratio in the stack imbalance. Okay, let the market do whatever it need to do. I'm not in a rush to chase all these moves. Is it a free indicator? If you have trading view, you can use it on there, but the platform that I'm using is deep chart. Okay, nice tap into the VWAP. Still, it not sitting at any level of my interest, so not going to trade. Are we positive on gamma 2? Yes, sir. Deep chart, I would say a lot better than trading view, because if you got experience with trading view and you guys trading on it, the execution gonna be off most of the time. You would not get a best feel but on this one is really good. Let me give you guys an example. Now I'm going on a sim account, right? This is how trade execution look like, TP, stop loss, everything look really nice. And execution, like, there's not a lot problem with it. That's why I prefer to use this one. You got all the order flow tools that you need with this thing, right? Footprint chart, volume profile, VWAP, POC, stack imbalance, all 40 range chart, the deep effort zone, delta candle, and it based on real volume because on TradingView it is only do tick based on tick, so I think it's not that accurate if you want to trade order flow with it. How long have you been trading? I've been trading for 6.5 years, more than that, a little bit more than that. I was getting to stock and option first. Got my dad teach me how to trade, and then late 2024, that's when I get really serious into day trading. That's when I found out about future, and then I started to trade from there. So almost 2 years for me trading future market, but almost 7 years for me to get in the stock market and know what it is. Okay, the range is kind of slow. So at 10, there would be a news coming out. Market, I could just wait until the news. Tomorrow is core PCE and the pre the pre GDP. So today the market could be go slow a little bit and tend to have more mean reversal. That's what I'm saying. We are above the high volume. So I'm gonna expect a lot of mean reversal. Exactly what we see here, view out the value area. Whenever we retest the value area high or the value area low, right? We tend to reverse. A lot of responsive trade at these level. What's new? Where do you see that here? On if you guys don't know, then you guys can watch for the news on Forex Factory. You can see these news here. It's only like the basic news, but if you guys like want actual like what is coming into the market, what we need to pay attention to, then X is a good place to go. Where are you from? Right now, I'm from the United States, Pennsylvania, but original, I'm from Vietnam. And also at later there at the end of the stream there will be a giveaway. So stay tuned. Okay, another attempt from the aggressive buyer trying to break these high. Let's see if they get any reward from all of these effort. If they don't have any reward, then could see another sell off down to this value area low again. Okay, interesting, interesting. Can we see a test to this level right here? That's what I'm watching for right now. Or the volume being absorbed up to 350 on the flange. Interestingly, into you on different approach or wrenching too much. Based on order flow, yes. Interesting things right here. Let's see how the market going to react. It's been able, as what I say, everybody who stay here for the pre-market plan, right? I'm watching for the market to be able to extend above the 300, or no, if we sell off, then I'm gonna see a sell straight to 200 at least. But since we able to hold, then this will be another level of my interest. Like previous week, Thursday and Friday, value area high with a PUC. Let's see if the market are willing to participate at these level or is gonna reject. Okay, tap into the 400. If it's able to break above, then I'm gonna look for a trade to the stack level right here. Apply spot 3, get my exposure 6 with the 1-day max level. Okay, now reject from it. Let's see if there's any good level for retracement. We can, for continuation, around the 80s, 380s. Okay, now tap into the 380. Need to see if the buy got trapped. No. Do you guys want to see me sharing this screen or the screen that I've been sharing? What do you guys want? Do you want me to show you guys this screen? Because the screen that I'm sharing to you guys right now are the one that I just want to have a look at a bigger picture. But the footprint chart would be where I'm analyzing my entry. Okay, the one you already. Okay, the one I'm already sharing. Yeah, Mr. Short and 400. Yeah, really nice rejection at my resistance level. And what I say, I need to see a reaction at a test at the 380s. We see a retest and now continuation sell off. Really nice. Uh, but it's like only a single A, only A setup, not a double or triple A setup for me. That's why I don't want to enter. I'm not sure today. I'm getting ready to leave for my trip. What's up, Unc? Okay. Pretty much a balanced range. Let's see. Miss out that 100 point short from the gamma exposure too, right? That's a good that's a good zone right here. It's interesting right here. Okay, I still want to continue to short down to this level, but I need a deeper pullback to the 30 to the 35. Looking at the footprint chart right here, sell off right below the VWAP, right? Aggressive seller stepping in, big trade from the seller, prints out stack sell imbalance, right? And then when the market retests, it stopped right here at these big trade with all of these positive delta, and then it's continued to sell off right now. But for me, I like to wait, tap into the stack by sell imbalance with trap buyers, and then continue to short. This is a good retracement, but I was just looking at this stack sell imbalance. Okay, a lot of sellers just got trapped at these low, waiting for an aggressive from the buyer. Okay, big trade from the buyer stepping in, pump up, retest, and then we might go get long again, retest the VWAP or the value area high again. If that is the case, we see a lot of negative delta at the low right here, a lot of big trade from the seller. Right? If they get a reward, then keep sell off to the downside. But if they cannot make any reward, right, or they ever got trapped, then I'm gonna lean more into a reversal. Just gonna watch how the seller and buyer participant do right here. Okay, Loki like the long right now. Low key. Okay, still cannot close above 280s. Not gonna entry yet. Keep pushing down, then no, the reversal ID will get invalidate. Keep pushing down. Okay, now gonna watch how it's react to these level. We miss out our first opportunity right here, and then the retracement right here. Now the sell off just keep continue. If you guys find out yourself like after the market making a huge move and you didn't participate and you keep chasing the market, trying to make profit from there because you feel like you gotta catch a move, is then tell yourself it's okay to miss our move, because look at the market context to find the next level where I will be interested to take a trade. Don't just miss out on opportunity and then be FOMO, chase, because that is the imaginary money that you're thinking in your head. Okay, the market, I want to take this short, but I miss out this short. I'm supposed to make $10,000, $4,000 with this short right here, but I missed out. So the imaginary profit in your head, you're gonna chase it. You're gonna chase a lower quality setup because you want to make the imaginary amount of money that you're supposed to have. That is one of the biggest trap that a lot of people can get in and then blew their account after they missing out a trade. Okay, I haven't looked at the chat for a second because this is getting close to the level of my interest, so I gotta gauge in the market. You think we get pulled back around 29,340, 29,340, which is at a RTH VWAP. I think we could, if I see a nice dump to this level right here, trap seller or anything, and then we could see a potential reverse back to the VWAP. I lost big money chasing those trade, not going to help in long run. Yeah, because if anyone who been through it, you guys will feel the relatable in the things that I just tell you, right? You will definitely understand what I mean by being FOMO and chasing a move, because the imaginary money, that is the key word, the imaginary money. If you don't make it, it's not your money, right? And the market don't owe you anything. Yeah, it not the first and not the last setup we missed. uh, when you start fantasizing, it messes you up. Yeah, you're right. That's right. The red green light, you set them. Here the box. Yeah, I did it right at the pre-market plan. I sit here with everybody in Chart Fanatic live. I do it live on the stream, showing how did I mark out these zone for you guys. It's not an indicator or anything. This green zone and red zone are me marking out by myself. By able to understand the market context by using option market theory and option flow. Oh, it's edging us so hard. I was still waiting for the market to have a pullback down here. Because interesting here, if we look on the SPX on the option side, what do we see here? Deep gamma delta. On the option side, there is a lot of aggressive buyer, right? Buyer putting a lot of effort in right here. Okay. If it unable to break the 75 to the 80, then we could see a dump. Let's see how the market play out at this zone. We might don't tap into this and reverse to the upside, but let's see. This is an interesting level that I'm watching. Sell off, create stack sell imbalance, tap into it multiple times. What happened? We hold. This previous candle attempt to break the high, a lot of aggressive buy putting in the effort, but they got trapped. So what we can do is short, stop at the high, and then target at the previous low. But this range is kind of tight, and I don't want to trade in this tight range. I need to see a better move for a market. How you will enter this long trade? Okay, for long trade, I'm going to show you how I'm going to enter long. First, to be able to, for me to lean to long, I want to see the market break above it with a stack buy imbalance. Right here, what did we see? Market trying to break the high, right? Try to break this stack seller imbalance. That prints out these stack buy imbalance. Am I saying that right? I'm watching for the market break out the stack sell imbalance, right? With the candle close above it. When the market push above with a lot of aggression, you see these delta, positive delta from the buyer with the stack buy imbalance right here. That means buy putting in effort. But then when it go up here, a lot more effort, but then reject to the downside. So the stack seller imbalance still really valid to me. And I don't want to go against it because I got all the information that I already need. I just need to see the confirmation, right? If it's look like still reject here, I don't want to get into a long, right? But if it's able to close above and then we have a candle come back down, retest this stack buy imbalance and hold, then I'm looking for a long continuation to the upside. But right now, as what I say for my idea, if anybody want to take a short, can take a short here, stop loss above these fail auction from the buyer, and then target could just be this previous low, right? Where seller got trapped or the 240. Does that make sense for you guys? What religion are you following? uh wait. I would wait to the 340 for short. Yeah, but that will be a long way to go. Yeah, if that makes sense for you guys, then that's good. That's all I need. Okay, and that's what we see. Fail auction. That is what we call break and retest setup. Break to the low, prints out the level that we're gauging in for reaction. Retest, fail auction from the opposite side. Enter, stop above the fail auction, and then target the downside. I think it's going to retest it for long. Okay, now I'm gonna gauge in this level for a reversal for long. Oh, I haven't shown you this story. This is what I mean by a retest, break and retest setup. Break to the low, prints out stack sell imbalance, wait for retest, right, from the opposite side. So if we sell off, the opposite side going to be the buy side, right? Buy stepping in, really aggressive fail auction, then get below here. So that is when we can just take a short, stop above this fail auction, and take profit at the previous high. Easily 2 to 1 risk to reward. Does that make sense for you guys? Make a lot of sense, right? Interesting here. Interesting. On deep gamma, we see aggressive seller. We see sellers start to stepping in. So that is the first thing that I'm watching. And also, we are getting below this level, right? So could see a continuation if we go down like to the 200 level. Let's see how the market react to these level of interest. If we have a nice rejection from here, I would like to expect at least to the value area low or the view up. That's what I'm watching for. What time frame I'm trading in? I'm trading in 1 minute or 40 range. Right here. This is the 40 range chart. Okay, we can see some nice negative delta at the low without any effort. Now we need the aggressive buy to step in. That is the thing that I need to see. We don't need to bottom tick or top tick a move. We just need a solid retest level. Wait for the market to come back, retest, and then play the trade from there. Like the volumes now is like that. I don't see a lot of move from the market. It's like slowly going down and now slowly form another balance range. Oh, this session is really, really boring. I mean, we got a nice move here. Missed that out. Let's see if anything can happen. How have you been trading before order flow? I can't afford deep chart. Um, when I start get into future, uh, the second month that I'm into future, I'm into order flow right away. So I cannot not afford deep chart. Okay, if anyone want deep chart but cannot afford it, then this weekend I'm going to host another giveaway for everyone. 3 month of free deep chart because I'm going to do it every single month. Everybody will able to sign up for free, and then I'm gonna do like spin the wheels to select lucky members, right, to get 3 month of deep chart access for free. Okay, 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 interesting. Need the market to do more. I'm gonna watch how the market do from here. Crystal Seller stepping in. Look, now is could continue down to the downside. If it's able to break, right? We can see all these protection level. Can be in a short. Gonna bring my stop down a little bit. About to test out this range. If it fell, then I'm gonna exit out early at this high. And wait for another retest at the 30 level. I do like this break to the downside. Okay, and the things shook up thin now. Interesting. Let's watch how the market gonna play. Okay. Interesting. March 29, 147. Okay, just form another protection level at the lows. See how the market reacts. Okay, I'm gonna try this long. It's high stop. Not a clear direction for me. Okay, I'm done with this account. 2 trade max for this account. Oh, rough start. First 2 trade. Okay. What even is that? Holy crap. What is that? Trump removed mine in Hormuz? Okay, that's why. Probably Trump. That we just filled the RTH gap. Uh, I don't know what was that. Hmm. After that, the market just come back to this calm stage. What are your thoughts today with your bias? Nice clean rejection from here. Now we just go down Trump news. I think we could just reclaim back to the VWAP. Miss out this opportunity, then fail execution around these range. So got to stop. That's a recap for today. I'll take that. Was waiting for that to fake out. Yeah, that is what I was waiting for also. And this is the fake out that you're waiting for. This is a huge fake out too. Do you only use session VWAP? I have the ETH VWAP also. Right now it's sitting at 272. But I just don't show it on the screen. Okay, fail. That 200 kicked me in that straight for my TP. What a joke, too. What about weekly or monthly? I don't use weekly or monthly VWAP. It's a huge one. Okay, click for short. Let's see. Okay, I'm gonna try this short. Target could be gamma exposure 4 or these trap seller participant. This would be my target. Let's see if it's able to break the upside, the stack sell imbalance. If it yes, then I'm gonna be out quick. Only risk like the buffer that I got, so there's no worry. Reason why is market create stack sell imbalance, break to the upside with positive delta, and they failed to push above. That's why I enter short. But let's see another attempt from the buy. If it's get tap out, I'm gonna be break even on this account. Okay. Just cut or should put hourly candle short legs. Oh, 3 out of 3 loss. Yeah. Okay, I think after 3 loss in a row, I think that's that's something. Okay, another stack sell imbalance right here. Let me see how this react to this level. Could be okay. Straight up break above it. That is a nice rejection to the downside. Say if it's just like this, then just call it a day. Don't need to chasing the market. I and preserve capital for tomorrow. another because there'll always be another day to trade. For the big trade, what is the minimum size? I got it at 60. No, I called a day. Waiting to something short. Not I'm off. Yeah. So when you copy trade account versus trade individual, I copy trade whenever I want to pass the account like on eval. But if I want to stack up my allocation, then I usually do it quick. So on eval, but whenever I pass, I trade them separately. How many fund I can do trade in a given day? I don't. I don't have like a number. Like if I have funded account, I don't need to trade all of them in a day. If there's good setup, then I'm gonna trade. But if there's no, then I'm not gonna trade. So someday I will be able to trade all of them, but someday I only do one or two account and then call it a day. Okay, so for the last few minutes of the session, anyone who still stay here, uh, type in I'll give you a keyword, type that in, and you will enter the giveaway. What should we do? Type, I don't know, order flow or TTU. Here, I will give you an example. Type TTU to entry the giveaway. Okay. Make sure you put the, I don't know what is that called, the things before the TTU, the exclamation mark before TTU, and then you will be in the giveaway. Okay, and everybody just do once. Okay, don't spam it. So the giveaway will be one Apex account, 1 month free trial of Trezilla, and Hola Prime CFD account. Okay, and I'm gonna give everyone 5 minutes to enter the giveaway, and then I'm gonna close it. Actually, 2 more minutes at 57, and I'm going to do the spin the wheel right here. For you live too, can you please explain one more time how you put the red and green box on the chart? Okay, so for the overnight inventory, we got the gamma exposure 2 right here and the value area high up here. That's how I mark out the level as a resistance level. Real simple. As what we see, it's been rejected 3 times already. And the green box is the value was the ETH VWAP. It was and the core resistance. Got my wall with the blind spot 10. That's how I mark these 2 level out. And this could be another zone too, which is the value area low with overnight value area low with the gamma exposure 4. But it lie up with each other, so I just keep them like this, not drawing out any blue box or green box. Yeah, there's a giveaway. Okay, now I'm gonna close it out. Okay, exclamation mark TTU. I mean, I still happy because the pre-market play out, just my execution. So after this, journal back on my entry, my stop, my execution, and see what I can improve and on to the next day. Okay, I got the list of people. Okay, you guys ready? Oh, what is that? Okay. So first will be the Apex account. I'm gonna shuffle this. Hold on, I think I saw my name on here. Is it? Is my name on here? I'm gonna delete it out. No, it's not. Oh, right here. I'm gonna delete my name out. All right. First one for the Apex account. Oh, I don't know how to say your name. Peter P. Chogodas 4537. I don't know. You got the Apex. Curry, bro, you are so close. Pete, it's okay. You're so close. Okay, next one will be the Hola Prime CFD account. Samuel Binet. I don't know. I'm not good with saying names. Are you in the chat right now? Okay. And last one for the 1 month free trial of Trezilla. Congrat. I don't even know how to say. But congrat, man. That will be our 3 winners for today. Right, you will go to follow the instruction in the support channel in the Chart Fanatic Discord to claim it. All right. All right, guys. You guys take care. If you wins, lock out. Enjoy your day. If you lose, lock out. Try to enjoy your day. Tomorrow will be another day. And you guys have a great day. All right. Yeah, have a good one, and I'll see you guys next week on Tuesday.